What's your view on Disney, Lee, and this spat?
You know, I think it's a non-issue. I get it. There's a lot of old school value players that are depressed because the stock is down. I don't like seeing the stock down. I love to see it down because it gives me the opportunity to buy more shares. Also, Disney's only one of the only stocks right now in this sort of trading no man's land we're in, where I'd actually buy today with some confidence. I understand that people can't tell if you're getting parks for free or if you're getting Disney streaming for free, but all that cash burn that everybody's complaining about got them more subscriber growth than Netflix. They got the movies people want. They've got the content that people want, and you're going to have to give it some time. So, you know, Disney and the CEO, they're clear. They know they have to get to profitability, but I think you've got to spend more than what people are comfortable with, and the stock is reflecting that. I think it's a killer deal, and I don't think that this whole situation with getting a board seat is really critical. Disney's going to do what Disney's going to do, and so far, they're winning the streaming wars.
All right, the stock not all right. Maybe it will come around to share your point of view, Lisa. What about Nike? The stock up 9% in January.
Oh, and think about what it was. I mean, kudos to everybody who is buying this stock in the general October lows. It's up like 40%, where most large growth, you know, the indexes are, they're up a big nothing. So this is a classic American company that's done very well. They beat estimates, but it's got a few issues. Number one, when you look at analyst price targets, it's right about where the price of stock is. So analysts haven't had time to raise their price targets. And I think, you know, that it's going to give you a little bit of, not a lot of energy on institutional ownership. But let's get to the heart of the matter. If Nike's going to continue working and not bump into the macro later this year, it's because that direct-to-consumer growth is going to stay there. I think it will. I understand that people still like to go to Foot Locker to look at shoes, but the profit is in direct-to-consumer. Also, China's opening up, and on top of that, the dollar's getting weak. They sell most of the stuff abroad, so it's got a tailwind. I think you could see the stock continue for the rest of the year.
Let's move on to American Airlines. Is this a name you own or one that you don't?
I don't own this stock. I fly American a lot, unlike some gold platinum. Let me tell you how I see this. I think if you've been buying it recently and you have a little trading profit, I take some of your profits off the table. I understand they're doing great as far as profitability is concerned, but we still have an issue with having enough pilots and having enough planes to get people to do what? To buy tickets, business class, high profit tickets in the front of the plane. There's simply not enough business class seats to go around for all the upscale leisure travelers to meet demand. And for this stock to continue on for the rest of the year, I think that you've got to see pilots come online. I think you've got to see more planes with more business class seats come online. And I'm leery about that reality happening in the next 6 months.